Good morning. Good morning to all the polarity students, especially BCom computers and BCom general students. Today's class is about the next unit, that is about banker and customer relationship. Okay, what type of relationship is existing between this banker and customer? What is the definition of the banker and customer? Okay, how they are related? We are going to learn in this topic today. Okay, so I request all the students to concentrate on the topic because we are not going to repeat these topics once again, and in the examination point of view you are going to get definitely the long answer for 12 marks, the relationship between the banker and the customer. 12 marks question definitely is going to be coming in the final examination on the topic of banker and customer relationship and rights of the banker, what type of rights the banker have, that also going to come in the examination, as well as the definition of the banker. The definition of the banker, the definition of the customer also may be coming for 4 marks. Clear? So I request all the students to concentrate. So move on to the definition, that is about the relationship between the banker and the customer. So here you can see the definition of the banker, which is presented. The Banking Regulation Act 1949 does not define the term of the banker, but defines what banking is. Okay, what the Indian Regulation Act 1949 is telling, what it is not giving the meaning of the banker, but what is the meaning of banking, it is explaining. So according to that act of meaning, you are able to see here, the banker is one who receives money, collects checks and drafts for customers with an obligation to honor the checks drawn by the customers from time to time, subject to availability of amounts in the account. So who is a banker? He is taking the deposit. He is also helping us to take the various types of loans existing in the bank, the various types of facilities, services the banks are providing to the customers is one point. They are also doing the special services like collecting the checks, collecting the drafts from the customers and lending to other people, and obligation to honor the checks drawn by the customers. What is the meaning of obligation to draw the checks? If anything is missing on a check, okay, according to the rules and regulations of the check, that is according to Negotiable Instrument Act of 1881, the check should be presented in this way. So if anything is missing, the signature, the date, the name, okay, etc. So if it is missing, the check is not going to be accepted by the bank. So why the bank is not honoring is also the responsibility of the banker to explain to the customer, and customer also to know from the banker from time to time availability amounts, what is the amount existing, okay, why the check is becoming bonds, etc. is going to be explained by the banker to the customer. That is one part of the duty of the banker and banking services. Next, when you go for the Banking Regulation Act, that is Negotiable Instrument Act, also is giving one definition, that is according to section 3 of Negotiable Instrument Act 1881 and section 2 of Bills of Exchange Act of 1882, the state the term banker includes person or corporation or a company acting as a banker. So according to section 3 of Negotiable Instrument Act 1881, section 2 of Bills of Exchange Act 1882 is giving the meaning of banking here. A person or a company, banking, a person or a company which is doing the services of banker to its customer is the meaning of the banker. Clear? Next, when you come for the meaning of the customer, a person who buys goods or services from a shop or a business entity is also a customer. A person who deals with a business entity, who is doing the business, okay, who is accepting the business, who is doing the service of the business, is known as customer here in the second point. There is no statutory definition. What is the meaning of the statutory definition? Means according to the law, perfectly they did not define who is the customer. But according to economics, customer is king, consumer is a king. Who is the reason for sales? Business. A person, a company, a entity who has an account with a bank is called as a customer. According to this definition, according to this point of situation what we are discussing about, okay, that is telling what is the meaning of customer. According to this banking system, who is customer? Okay, a person, a company, a entity who is having the account in the bank is called as a customer. There is no agreement as regards to time period of dealings. A casual transaction like encashment of check does not entitle a person to be a customer. Suppose he is not having any bank account. Okay, someone gave the check on behalf of the particular person. He is coming to the bank and withdrawing the cash on that check. Means he is not becoming the customer. A person who is having the account in the bank where the bank is doing the services to him and there is a, dealing means understanding, agreement when it comes into the customer. A casual transaction like encashment of check. Encashment of check means what? You are giving the check, he is giving the cash. A customer is one who has an account with the bank and to whom the bank undertakes to extend the business of banking. A customer is one who has an account with the bank and to whom the banks undertake to extend the business of banking. So what you are able to understand in this meaning, customer who is having the account is one point, who is getting the services of the bank also is coming under customer. Clear? The definition of the banker as well as the customer. So when you come between the coordination or the understanding or the relation between these two, banker and the customer, if you talk about, the relationship between the banker and the customer depends upon the type of the transaction. These relationships confer certain rights and obligations both on the part of the banker and on the customer. Okay, so both are having, depending upon their relationship, some rights are also there, some obligations are also there. So these classification, this relationship is classified into two categories. One is general relation, that is normal relationship, and special, extraordinary relationship. Two types of relationships are existing between the banker as well as the customer. One is general relationship and the next one is a special relationship. Clear? So when you come for general relationship, debtor and creditor relationship. Who is debtor? Who is creditor? A person who is giving the money is creditor. The person who is taking the money is debtor. Okay, who is in debts. When the customer avails a loan or an advance, then his relationship with the banker undergoes a change to what it is when it is deposit holder. Suppose customer is depositing the cash, he is becoming creditor. When the customer is taking the loan, he is becoming the debtor. Since the funds are lent to the customer, he becomes the borrower and the banker becomes a lender. Who is taking the loan? Customer is taking the loan. So customer is called as what now? Borrower or a debtor. And the bank becomes the lender, because bank is lending the money to you in the form of a loan or in the form of an advance helping to you, or in the form of an overdraft. Okay, so bank is a lender here. The relationship is debtor and creditor relation. The customer is becoming whom? Debtor, and the banker is becoming creditor. The person who is giving money is creditor. The person who is taking the money is debtor. So it may happen reverse also. Which condition it becomes reverse? When you are depositing the money, you are the creditor. Clear? First point. Did you follow the point here? You are taking the loan, you are taking the advance, you are taking the overdraft. So bank is lender and you are the borrower. Debtor and creditor relationship is starting here, which is called as general relationship. Clear? Next, when you come for the special relationship, according to section 3 of Indian Trust Act, according to section 3 of Indian Trust Act 1882, there is some obligation to the ownership of the property and arising the confidence reposed and accepted by the owner and declared by him for the benefit of another or of another and the owner. The trustee is the holder of the property on behalf of the beneficiary. So here special relationship. I'll give you one small example so that you may clearly understand what is the definition given here. You think that you kept 5 lakhs fixed deposit. How many lakhs? 5 lakhs you kept the fixed deposit. Okay, so this fixed deposit is going to expire after 5 years or 10 years. So at that period when this fixed deposit date is coming for expiry, you may not exist. Means you are not there, you are not alive. So there will be the name of the nominee whom the amount should be paid. So when they are going to pay, when the time limit of that fixed deposit is completed, the bank is taking the responsibility to pay this amount of 5 lakhs or 10 lakhs what you kept as fixed deposit to the particular person who is called as a nominee. Who is the nominee? Either wife or children or anyone whom you mentioned the name there. So bank is taking some responsibility. What responsibility it is taking? It is taking that this 5 lakhs should be reached to the particular person whose name is mentioned, whether the person is available in India or out of India also. He is in abroad, he is not existing in India. So bank is taking the responsibility of crediting this amount to the particular person who is not there in India also. So bank is becoming a trustee. Who is the beneficiary here? The nominee is the beneficiary. The customer saved some amount, but he is not existing now. This amount should reach to the particular person on whom the amount has been saved. Clear? Whom the amount should be reached. So bank is acting as a trustee. Bank is also acting as an executor because it is doing its service duty for helping the customer. That is called as a special relationship. Clear? Hope you understood the meaning of the special relationship, which is explained according to section 3 of Indian Trust Act 1882. So one more special relationship is also there. What is that? Is bailee and bailar. Okay. Section 148 of Indian Contract Act. Section 148 of Indian Contract Act 1872. So what is bailment here? A bailment is a delivery of the goods by one person to another for some purpose upon a contract that they shall, when the purpose is accomplished, be returned or otherwise disposed of according to the directions of the person delivering them. So here the definition is given about the bailment, where the relationship between the bailer and bailee is coming. Okay, you want 1 lakh rupees and you want to take from some person. So they want some security when they want to lend this 1 lakh rupees to you. So they may ask you jewelry, or they may ask some assets, or they may demand something to keep as a security. So what you are keeping in security there? You may keep your house papers, asset or property papers, 1 point. You may keep the jewelry also with this particular person, or you may keep your car also in this particular person, or you may keep your bike also with this particular person who is ready to lend the money to you. So what happened? Ownership of that particular good or a property or an asset or an item is transferred from you to the person for whom you are taking, from whom you are taking the money. Means ownership of that particular asset or the security provided by you is transferred to the person who is lending the money to you. So he is the owner. Till when he is the owner? When you are going to return the money, till that period he is going to be the owner. After you return the amount, the ownership is transferred to you. So this all situation is coming under bailment. Okay, this agreement is coming under a bailment. There is going to be a return format for this. Return transactions will be there for this. Clear? So who is bailer? Whom you are giving the goods. Who is taking the responsibility of this? Okay, bailee. So the person who is taking the responsibility, bailar is the person who is giving the goods. I am taking the goods, bailee. You are giving the goods, bailar. So yeah, I am going to release. When you pay the amount, it is going to be released. The person delivering the goods is called as bailar. Means you are giving the goods to bank. You are giving the goods to some other person. You are the bailar. Bank is a bailee. Who is taking or accepting that security is called as a bailee. The person to whom they are delivered is called as the bailee. Banks secure their advances by obtaining tangible securities. In some cases, physical possession of the security goods, pledge, valuables, bonds, etc. So what they are taking in this? Tangible, not intangible. You are a very good person. Okay, you have good fame in the market. That fame cannot be accepted for taking the money. Everything should be seen, accepted. Okay, that comes under tangible, which can be seen and which can be kept as a acting as a security. Clear all of you? Tangible securities like goods. Okay, written format pledge, valuable important bonds. If you are submitting means the relationship between the bailer and the bailee starts, and this complete situation is called as a bailment according to Indian Contract Act 1872 section 148. Clear? One special relation. Next special relation is lessor and lessee. According to section 105 of Transfer of Property Act 1882, a lease of immovable property is transfer of right to enjoy such property made for certain time, express or implied in perpetuity in consideration of a price paid or promised of money, a share of crop, service or any other thing of value to render periodically or specified occasions to transfer by the transferee who accepts the transfer on certain terms. Safe deposit locker is a very good example. So let me tell about the safe deposit locker. Okay, you already having the bank account in the bank, and both wife and husband are employees. Kids are small, so no one is going to stay at home. So there is a chance of robbery. So in order to avoid this situation, what you are keeping? The important documents. Okay, the gold, the jewelry, whatever you have important, what you consider as important, which can be protected, that you are keeping in the bank by opening the locker account. You want a locker system to keep your security safely in the bank. So for that, some charges will be there. Yearly some charges you should pay to the bank. After filling the application, the bank is going to deduct some amount, charges, service charges for providing these lockers. Then the locker facility is going to be given to you. You will be having the keys. In the bank is also going to have the keys. Means your keys are there, going to be there in the bank. So what is happening here? You are keeping and you are hiding. You are keeping in the safe in the deposit locker. What is happening? Your important items, documents, you are not giving for bailment. Okay, you are not taking the loan on that. But you are keeping with the bank for safety and security. And you can use the service. Suppose you want to attend the function. You are going to the bank, requesting, taking out one jewelry, using it for the particular day, and the next day you are again keeping in the locker. Means you are doing the services, you are using the service of this locker whenever you are in need of, required for. Clear? So that type of situation, that type of relation comes under lessor and lessee relationship according to section 105 of Transfer of Property Act 1882. Clear? Next, one more special relationship, agent and principal relationship according to section 182, the Indian Contract Act 1872 defines the principal and the agent relationship. Here, what is happening is the person for whom such act is done is called as a principal. Bank collects checks, bills and payments to the various authorities, rent, telephone bills, insurance, premiums, etc. because of the customers. So what is happening here? Principal and agent relationship. So sometimes you are the principal, sometimes the bank is the agent. Sometimes, some situations, bank is principal and you are the agent. So when you think about the agent and the principal relationship, where you are the principal means bank. Nowadays you are able to do e-banking, net banking, where the services are provided on your mobile phones, laptops, desktops. If you download the particular app, all the banking services are at your hand. You can do it by yourself. Some specialized services are provided by the bank to you. So now bank is acting as an agent to its customer to provide some special services to its customer. One point. Second thing, you want to pay the bills, you want to pay the insurance, or you want to pay some extraordinary activities, electricity bills you want to do, or any other activities on behalf of you. Bank is paying your telephone bills. Bank is paying your insurance premiums. Means it is doing special services, acting as an agent to its customer, to the bank account holder. 2 points. Where it is acting as an agent, you are acting as a principal. But one more point. Principal and agent. When you take the loan, when you deposit the money with the bank, it is calculating the rate of interest for deposits separately, for the loan separately, for short term, medium term and long term separate rate of interest, and accurately it is going to do according to the Indian Banking Regulation Act. It is doing the services to you, calculating exactly. It is maintaining the transparency, means it is giving the clear picture to you about this calculation and then helping to you. So here it is a principal. We are the agent. So relationship between the banker and the customer is principal and agent. First is debtor, creditor. Okay, bailer, bailee, agent, principal, lessor and lessee. For debtor and creditor, I gave the example of loans and advances. Okay, for bailer and bailee, I gave the example of securities. You are providing the securities and taking the amount or properties. For lessor and lessee, locker is a very good example. For agent and principals, the insurance premiums, the telephone bills, the rate of interest comes under the relationship example of agent and principal. Okay, next one more special relationship as a custodian. A custodian is a person who acts as a caretaker of something. Banks take legal responsibility of the customer's securities. While opening a demat account, bank becomes a custodian. What is demat account? Okay, you want to buy the shares. So you should open the demat account. When you want to invest your money in shares, you are opening the demat account. By opening the demat account, what is the advantage to you? If you open the demat account, the bank understands that you want to invest somewhere else. So bank advises you, this shares are at this rates, okay, these are the places where you can invest in mutual funds, etc. The clear idea, the clear picture of various investment places, it is going to explain to you. So by this you get the clear idea where it is good, where it is safe, how it is dealing, where are the profits and the losses. So when you open the demat account, when you come into the agreement, okay, the shares value, when the shares are decreasing, it gives the information that you can invest here. When the shares rates is increasing, it gives the information that you can sell your shares now. So that type of facility it is giving to you people by opening the demat account. Legal responsibility, it is also acting as a custodian, means some children. Some people, some parents are living abroad, some children are also living abroad. The amount is transferred from one particular area to the one more country. Okay, safely it is transferring the amount, and crediting to the particular person is also one of the responsibility of the banker. Clear? So in this way, bank is doing some specialized services to its customers who are opening the bank account and helping the bank. Okay, termination of relationship between the banker and the customer means when this relation closes, the death, insolvency, leniency of the customers, when the customer is becoming mad, leniency, death, insolvency when you are closing the bank account, the customer closing the account, voluntarily termination. You don't want to maintain the account, any more account in this particular bank means it is voluntary termination. Liquidation of the company is winding up. Okay, the partners has been divided, their shares, their profits, etc. Okay, closing of the account by the bank after giving the due notice. You are not able to maintain a good relation with the bank means automatically the bank is also going to close the account when you are not maintaining the minimum balance. Also the bank closes the account. The completion of the contract or specified transaction, also the bank is going to close. Clear? So today I explain you about the banker, the customer, definition and the relationship between the banker and the customer. The general relationship and the special relationship. It is one of the important 12 marks answer for your final examinations. You think that, oh, this is very easy. Of course, it is easy. But it is very important to know what is there here and how to learn it and how to present in the examination. Clear? So I request all the students to listen the classes, to understand something from the classes. Okay, in spite of commenting the lecturers. Thank you very much. Hope you all are safe. Okay, stay at home, be safe and be healthy. All the best. Thank you. Let's meet in the next class.